Hi, this is Kerry Artek with Wicked Stocks bringing you the Daily Apple Report for Monday, April 3rd, 2023. Before I jump into all the charts, please click like if you would, if you haven't already. It does help us get found on YouTube. Also, subscribe to the Wicked Stocks YouTube channel. You'll be provided notification each and every time new content has been uploaded. That includes the Daily Apple and Daily Tesla Report and the occasional stock pick we put out for free. Last week, we did one on AMD. You may check that out. We also do two individual stock picks a week that you never see on YouTube that are part of the wickedstocks.com subscription package. Um, last week was General Motors and Intel. They're still timely. You may check those out. If you do go through the payment gateway at wickedstocks.com, it'll provide you daily analysis in the Triple Q, the NASDAQ 100 ETF, in the SPY daily analysis, that is the S&P 500 ETF, weekly S&P 500 index, weekly NASDAQ 100 index, and weekly long bond ETF in the TLT, as well as two individual stock picks a week. If you go through the payment gateway and you check out everything for a few days, if you don't like what you see within 5 days, just shoot us an email. Tell us you're not happy, you want your money back, and we will gladly refund you. So let's take a look at the charts here. This is a weekly chart that you're probably familiar with if you've been watching the Daily Apple Report for the last, 6 months or so. We came off of long-term support that had been targeted that was in the low to mid 120s back in early January. Once we tested that, we had mentioned how the low 170s should be considered in reach by some point in 2023. And in fact, that was kind of answered as a nearer term objective when we gapped above and settled above in early February the 137.84 channel top, then becoming a 3 to 5 month objective in the low 170s. And most recently, last week, after the better part of a week of hesitation and pushing through and backing away the upper 50s, low 160s, we clearly settled above the 160.4958 long-term Fibonacci. A, B here are the measurement points. That is the all-time high from late 21 against B, the pullback low last January. 160.49, we settled above that later last week. We've got some follow through Thursday, Friday. And so we are well on our way into the low 170s now. I give this kind of a 1 to 2 week target. So the 1 to 2 week time frame, you could call it 2 to 3 weeks. I don't think it'll take that long. Is now bullish above 160.49. You could say that the upper 150s, low 160s over here on the far right, that is also your 3 to 5 day swing trade, bullish above, anticipating perhaps the lower 170s over the next 3 to 5 days. So that's really what we're looking at now. As you're well aware, the long-term dynamic has been bullish all along above 137.84, and the more mid-term dynamic above some variation of this rising speed line, presently at 151.85. Now, we have to reconstruct these speed lines every time a new high is put out. I call it a dynamic approach to trend identification because it is. You recalibrate for every new high, and then the market pulls back. If you're familiar with this, if you've been watching the Apple report now for the last couple of months, you know that there was a variation of this speed line that in early March contained the lows. If you remember, it kind of came across like this and just hit both of those primary lows, and we came off of it. And now we've reconstructed at 151.85. If we back off from last Friday's high of 165 even, and if it remains the high as we move into later week, this speed line will remain intact and rising daily. If we push to a new high, then we reconstruct the speed line. It's about as simple as that. So this is actually a good image to continue with. Yes, we have 167.16. That is about a 1 month rising channel top. It is representative of near-term resistance in its own right, but because of the fresh buy signal off of the upper 150s, low 160s, I want to give the market a room to breathe, if you will. And it really is 168.16 that I think is a sort of solid stick your neck out resistance. Now, just so you know, this 167.16, we could call this a 1 point range exactly. 167.16 is once again this channel top. And, I had to do some head scratching here to determine which of these am I going to go with as the session containment level. And we're not really far away from 167.16. So in order to give the market a little room to stretch, 168.16. But once again, if you want to call it a range of resistance for the day, 167.16 up to 168.16, well equipped to contain daily buying pressures. We may top out here into the middle to later part of the week. You never really know. So you could make some case that this formation is sort of the 3 to 5 day swing trade. We had the buy signal, later last week above the upper 150s, low 160s. And, that was the 3 to 5 day swing trade to the upside. 168.16 could be your profit taking area. And just know that over the next few days, it actually converges with our target anyway, which is this 172.02 channel top on the weekly chart. On the daily chart, it's at 171.85. You can see it all up here. And if you'll notice in the support resistance area, I do mark the 1% zone below 172.05. Starts at 170.32. And this is for those of you who've been long for some time following the buy signal in early February, this is your profit taking zone of resistance. It's also your short sale zone. So if you're long now and you're taking profits in the low 170s, I think that is a good play. You could also reverse and play the short side. That could mean, for instance, at this point in time, buying 151, 155. It is this sort of narrowing zone here between 158 and 151.85. You could split the difference as a 155 out of the money put. So as we push into the low 170s, you could consider buying 155 out of the money puts that don't expire for at least a month. We could fall off from there back to this speed line, wherever it may be at that time. It will continue rising through time, which is why I round up to 155. And this long-term speed line is dropping. So I think that that would be a decent play, and you could sort of summarize that for yourself. If we push into low 170s sooner than later, you could reverse by taking profits. Maybe you bought 170, 172 out of the money calls some weeks ago, and you could sell those and reverse and buy 155 out of the money puts that don't expire. I'd go at least a month. You might go several months out on that just to preserve delta on the way down, and you're less susceptible to theta, the time decay element. So I think that that kind of covers the upside. Let me jump into this as well. We've got 167.16. I'm going to emphasize really more like 168.16. Downside today, we've got 164.26, which isn't far off from Friday's settlement of 164.90. We could ease back slightly to 164.26, above which bullish momentum remains intact today. That 168.16 level in reach. If we break or open today below 164.26, 162.14 is in reach, you can see here, and that is nothing more than the high that was put out almost 2 weeks ago. It was a prominent spike high. We pushed to a new high and closed negative on the day. So it is there as a level to buy for the day. We could actually bounce off of 162.14 up to the 168.16 channel top. So we could ease back to 162.14 today, for instance, and then within 3 to 5 days, continue up to the 168.16 level, which, as I mentioned, or later in the week, will be converging with the low 170s longer term resistance anyway. So, if we were, and I'll just put it this way, to close below 162.14, which is this high, and also keep in mind that the low on Friday is 161.91. So if we close below 162.14, I'm just going to call that a reversal, and we should then ease back probably Tuesday into the 158.44 to 160.49 region. That is still a notable zone of longer term support now, was resistance until a few days ago, that you can see on the daily chart right here. Now, this is getting wider, and at some point, I'm going to have to choose which to follow. At this point in time, 160.49 is still a very respectable support, but later in the week, there are some things going on that will converge with the upper 150s, and that may be our base of support. So, what am I saying here? If we close below 162.14, you should allow, I think, for the upper 150s within a day or two or three, where we could actually bottom out for the week itself, and above which the low 170s are now considered a 1 to 2 week objective. And that is this is sort of a recent phenomenon, if you will. So, I could go into what if we close below 158.44, and I guess I'm doing that right now. I don't see that happening today. This is a solid zone of support for the week. So if you are kind of the 1 to 2, 2 to 3 week time horizon trader and you're not long yet, If we slip into the 158.44 to 160.49 region over the next few days, that is an opportunity to get long in anticipation of the low 170s. If we close below 158.44, we have could be a 3 to 5 day sell signal to 151.85, which is this long-term speed line. You can see I have it as a 4-star support in the lower right that can absorb selling through April, and from here we can turn up to new highs within several weeks, upward and onward into the lower 170s. So 151.85 is our solid pullback support through April. If tested over the next week or two, can absorb selling through April, and from there we can rotate on up. You can see it right here. We could test this if we were to test it, 151.85, bottom out through April, and from here push on up into the low 170s within 3 to 5 weeks. So that is a 3 to 5 week time frame. Last thing I will say is that if over the next week or two we close below 151.85, we have a good second quarter high, and this market should then over the next month, 2, 3 at the very most, continue south into the significant 130s long-term support. But almost no sense in even mentioning that. I'm going to leave it at that. Went on for over 10 minutes today. Please click like, subscribe, and check out wickedstocks.com. I'll be back tomorrow with Tuesday's Apple Report.